Okay, hi, this is Kurt with Radioactive Trading, and we're answering the critics of the blueprint. I'm excited about the critics bringing forth these arguments because it simply brings more attention to the blueprint, and I'm thankful for that. But one of the claims is that a long call is identical to a married put. Well, that simply isn't so, okay? But they'll go on to say that a long call is better because it uses less capital. Um, are you as confused as I am? What does identical mean? If you're going to compare two things and say they're identical, but one is better, well, they're not identical at all, are they? Let's put it in practical terms. If you place an order for stock and a put option, a married put, and instead you were delivered a long call, would you be happy? Well, you wouldn't. But why not? Aren't they identical? Well, let's compare, okay? Here's the January 2011 call options compared with the January 2011 put options plus stock. A call option does cost less. The January 2011 $75 call is trading at 810 by 850. If you place an order and got filled at 830, that would be right in between, okay? A married put would cost you more. You need to pick up the $75 put option plus the stock. So if it's trading at 1450 by 1480 and you got filled in between at 1465, you'd still have to buy the stock. So that adds another 67.70. Now, let's take a look here. We've got a basis for comparison now. The invested amount on the long call is only $8.30, but let's not forget how much you can lose. You can lose $8.30. On the other hand, if we pick up the stock plus the put option, it's going to cost us $82.35. Shoot, even if we didn't get filled in the middle, it costs us $82.50. Okay? Now I recognize that's nearly 10 times as much capital invested, but it's nowhere near as much risk. You see, the amount that you can lose in this case is only the time value that's in the put, not the intrinsic value. You're guaranteed to get that back. Okay? So the $7.35 is almost $1 less than what you could lose by trading a long call. If we're going to say that they are equivalent positions, well, I say no, especially if we base equivalency on what you can lose. Here's the data again. All right, on the left we've got the long call for the $75 strike, and on the right we have the long put. The long call risks more, almost $1 more. Okay, I'm not making this up. It's due to this equation called the Black-Scholes equation. Now, my critics will bring this up, but they don't actually seem to understand the math. You see, part of the Black-Scholes equation is the free interest rate, okay, or risk-free interest rate. The critics are repeatedly failing to even mention or see that the Black-Scholes equation assumes that you have the capital to buy the stock, but you just don't. Instead, you put it into a risk-free interest bearing account, okay, and then use the rest to buy the call. Okay, it's that interest from that deposit that makes up the difference between the risk amounts. Remember, that's a pretty big difference. $8.30 risk versus $7.35 risk. Well, the married put doesn't use interest. We buy the stock and the interest is implied. Okay, it's like it's been paid to us, but it's been paid to us up front. Here's a math lesson. To say that these positions are equivalent is not correct. A married put equals a long call if and only if accompanying that long call there's a deposit of the same amount of capital and it's bearing interest. Okay? So there's my first conclusion to answering the critics. It's part one. Identical means the same in every respect. If you're going to say something is identical, please don't say this thing is identical but better. All right? Secondly, a married put is a way of limiting risk on a stock that you own. Many folks already have stock and want to know how to limit it, not swap it out for a call. All right? And a long call does not have an identical risk reward picture to a married put. The dollar amounts risks are different. Now, this is only the first of three answers, but it's important that you learn how to protect your stock, and I don't charge for most of the information, okay? Go to radioactivetrading.com and pick up your free report.